internal case competition. I'll be the timekeeper during the presentation. I'm sure you're aware by now, please turn off phones, no pictures or videos, and please don't leave the room until the presentation and the question period has concluded. Presentation will be 10 minutes. I'll hold a green card at 5 minutes for 5 minutes left. I'll hold a yellow card at 7 minutes for 3 minutes left. And a red card at 9 minutes for 1 minute left. At the end of 10 minutes, I'll bang on the desk, conclude the presentation. Following that, there'll be 5 minutes of Q&A, and I'll notify the judges when they're on the last question, and you can begin whenever you're ready.
Perfect. Good morning. Thank you for having us. These are my colleagues Elise and Kathy, and I'm Keelan, and we are here representing KCA Consulting. So today we're here to talk to you about Spruceland Properties, so I've outlined a bit of an agenda as for what we're going to discuss with you today.
Spruceland Properties has a strong mission to foster and promote economic and social development in order to realize economic prosperity in a healthy society. We believe that you guys require a strategy to regard your future and longevity as an already established and viable company. Some subsidiary problems that you guys face are that your shares are trading below value, your current structure cannot support expansion, and you are dependent on the oil and gas industry. To move into our analysis, we have ran a SWOT to determine your company's current standpoint. To begin with, we notice your strengths, that the region has historically earned 90% more than the average Alberta income. You are strong advocates of social and economic developments in underdeveloped areas. You have strong connections within the First Nation communities and high ROE and ROA ratios in your financials. With that being said, we notice your weaknesses are that you rely heavily on the oil and gas industry. Your organization is not structured to expand. Your shares are undervalued, and you have underutilized cash and cash equivalents in your financials. To consider some opportunities that we believe you guys have is that you can expand into other regions of Alberta, partner up with other First Nation and Métis communities, and you can enrich those communities by developing, and you can intersect with alternative energy sectors. With that being said, some threats that you guys face are the oil and gas demand decreasing and a negative GDP growth forecasted for future years. So the key takeaway that we have came up with is that you must diversify and maintain foundational connections in order to adapt to changing economic conditions while fulfilling your mission. I will now pass it along to Kathy, who will talk about our quantitative analysis.
Thank you, Elise. Your net earnings and income increased by $1.77 million in 2015. 23.5% of your revenue comes from oil and gas tenants. This is a financial risk as a quarter of your revenue depends on the oil and gas industry, and oil prices are dropping. The net asset value per share is $45.84, and the market value per share is half of that at $21.45. So the main reason why there is such a big gap between the market value and the asset value is that the shares have to be traded privately. So shareholders have trouble trading the shares and usually have to trade amongst themselves. If we look at the price to earnings ratio, we can see that it dropped in 2015 from 6.1 times to 4.82 times. The dividend yield is just over 3% for both years, and the payout ratio decreased in 2015 to 15%. The return on assets and return on equity has increased in 2015, as well as the net profit margin. This is very good for your company. In terms of financial leverage, your debt to total assets is 48%, and that puts your company in a good position to be able to manage its liabilities and be able to pay off its liabilities. Cash and cash equivalents went from $10.5 million in 2014 to $17.1 million in 2015. The two reasons why you have such a large cash reserve is so that you have market protection, as well as the ability to buy out companies, make good buys when other companies have to sell. However, it is important to note that having such a large cash reserve is not efficient for the company, and it's not being utilized properly. So the key takeaway from the financial analysis is that the ROA, ROE, and net profit margin is higher in 2015. The cash reserve is very large at $17.1 million, and the market value per share is only half of the net asset value per share. And so your shares are being undervalued.
So given both our SWOT analysis and our analysis of your current financials, we have come up with 3 alternatives for your company. We have dissolve, restructure, and expand, keeping in mind that you'd like to remain profitable, have the social impact, as well as benefit your shareholders. So with this, we've decided to reject the idea of resolve. Although you do have the offer to actually buy out all your assets and be able to pay out your shareholders, we believe that doesn't align with your mission and your values. So moving forward, we believe that restructure is the best opportunity for you. And by restructure, we mean your company should go public. With that, that would provide your company with capital, as well as the opportunity for growth and shareholder wealth. And what comes with restructure is ultimately expand, which you'll have the ability to diversify yourselves, as well as continue to have that social impact that you've had since 1969. So why? So going public would provide your shareholders with both liquidity and wealth, as well as the new structure would be able to encompass growth, which your current structure cannot. As well as new share capital can actually provide a new means of funding for ventures such as diversifying your real estate investment portfolio and the financial flexibility to pursue socially beneficial projects. So we suggest you list on the CSE or the TSX venture. So that would entail you would have to hire an underwriter as well as a lawyer to have your initial public offering. However, that would lead into a secondary offering, which would allow your current shareholders to actually sell their shares on the market at market price. With that, we also recommend that you may bring on some external board members. And what that would do is provide an unbiased perspective into your company. And that would allow you to invest in Indigenous communities. And we recommend doing so by investing around $10 million into developmental projects within those underdeveloped communities. And you can do so through diversifying into new sectors, such as green technologies and sustainable development, to pull away from your dependence on the oil and gas sectors.
We recommend an initial offering price of $33.65. It's a midpoint between the net asset value and the market value. In order to pursue our $10 million capital project, we would take half of the increase in cash between 2014 and 2015, which is $3.4 million, and the remaining $6.6 million we would obtain by offering 197,000 shares. This would dilute your earnings per share to $3.90. However, if net earnings does increase by 1.77 million, as it did from 2014 to 2015, then earnings per share would rise to $5.01 per share, which is higher than the current EPS at $4.45.
So with that, we've also come up with a few programs that you would be eligible for working directly with these First Nations and Métis communities. So first is the Indigenous Capital Housing Program and Strategic Partner Initiative. And so both those programs, you work directly with the government for support and funding, as well as additional government investments into the projects that you will be developing. And then would be the Skills Link and the Work Experience programs. Those programs would allow you to employ individuals from the communities that you'll be working in and developing in. And what that would do in turn is strengthen the economies within those communities and instill strong social values within those individuals. We also list a few programs that the Indigenous communities would be eligible for directly, so that they could have the funding and the capital to invest within themselves. So a bit of a timeline for this is it would take about 6 months, give or take, to go public with your company. So there would be preliminary steps such as hiring your underwriter and your lawyer, as well as filing your preliminary prospectus. That would go into the waiting period where the CSE or the TSX would actually review your documents, and then you would prepare your final prospectus within those. And then the completion of the IPO would entail you actually going public. From there, the secondary offering, as we did discuss with you, your shareholders would have the opportunity to take their shares to market, and then we urge you to focus on the pursuit of growth and expansion over the next 5 years, where you could realize returns on your $10 million investments. However, there is a couple of risks to this. There is the risk of liquidity. So by spending your money on developments and properties in underdeveloped areas, you're at the risk of having less liquid cash in your cash reserves. So to mitigate this risk, you would use the share capital from the new shares to actually invest in these projects. Secondly, you would have the loss of management control. So with the issuance of new shares, you would ultimately have new shareholders, which could take some control away from your current management and shareholders. So to mitigate that risk, we recommend issuing only 12 to 15% stake with the new issues. So that would ensure that your company didn't lose the control that it currently has.
The strategy that you guys require is regarding sustainable social and economic growth.
We recommend that your company restructure and expand.
And by doing so, you will actually have increased shareholder liquidity and wealth. And you'd also have growth opportunities while maintaining your social responsibility that you had for over 50 years.
Thank you, and now we open the floor to any questions.
Awesome. Thank you. We'll start a 5-minute question period with the first question.
So I just got a question in investment in Indigenous communities using that assets, you have to do that. I fail to see how that would help expand and create long-term return on those investments. Maybe I missed that, sorry.
No, so, as the market for oil and gas is going down, we find that a lot of things in the northern Alberta regions are undervalued, as they are quite dependent on the oil and gas industry. So being in the financial position that Spruce Land is, they have the opportunity and they have the capital to actually invest in properties that are potentially worth more as the economy revitalizes. And with investing into new energy sectors in that sense, they would be at the forefront of a new technology.
So you hold them and sell.
Yeah.
Were you hoping to get any profit though when holding on those?
They hope that, we would hope that they realize a return, as like the interest rates are low with the economy, in this current economic state. We feel that they could realize a potential return on these properties and assets.
In your opportunities, you mentioned expanding to other regions of Alberta, but you didn't really talk about that in your plan. Just maybe if you wanted to, there's opportunity to expand on that.
I could take that as well. So by expanding into other regions of Alberta, we didn't quite go as in depth as we wanted to due to time concerns.
Yeah.
However, we did believe that you could go into different Indigenous regions in the northern area that are quite underdeveloped, and those communities would actually qualify from a lot of funding and capital from the government because they don't have sources such as clean water and like even power grids that are sustainable. So we figured Spruce Land could have potential opportunity with those kind of communities.
You worry about, part of your plan is to have bring in some external board members, as well, of course, you're going public. Do you, and I know you did talk about this a little bit, but do you worry about kind of losing control of, not the business itself, but your key mission being socially responsible?
With the risk of having external board members, we do realize there is a loss of management control, but those new we're able to mitigate that risk by adding new shareholders that can add a new perspective into the company and also a non-biased position to where those assets would stand.
With one, you had a timeline for an IPO of only like 6 months.
Yes.
Has that been done for other, like what's that based off of?
So this was actually based off of the KCA website. So this is broken down into what the preliminary steps would be, the waiting period, and the completion of the IPO. So it would be around 6 months. Give or take, just as the company is already listed with the ASE, they might be able to forego some of these steps. However, this was a general timeline that it was given to take a company from entirely private to public.
Do you have any projection on where we can maybe realize what effectively the stock price will be following kind of all your implementation plans? So, I mean, you mentioned the offering looking at $33, which is of course a little bit myself, you know, as a shareholder, a little bit better of a realization of why I can get it privately. But sort of, you know, following this timeline, what's sort of our forecast?
So it would be a couple of years, but after the $10 million capital project, we hope that revenue would grow, and so then net earnings and income would grow as well. And so this is undervalued. So right now the net asset value is at $45.84, and so hopefully it goes past that once income comes from our other projects while we diversify the real estate portfolio of the company, Spruce Land Company.
We have time for one more if you guys have one more.
Okay.
We're good.
Thank you.
All right.
Thank you.
Awesome. Thank you.